Welcome in, everybody. Today we're diving deep into Linda Pinson's Keeping the Books.
Oh, a fantastic choice. This one is a classic.
It is. And, it's not like your typical dry accounting book.
Right.
It's almost like sitting down with like this award-winning business planning expert
Yeah,
who really just wants to see entrepreneurs succeed.
absolutely. And I think what I really appreciate about Pinson's approach is how she brings in those real-life examples from
Hmm.
teaching. And she tells the story about students who had these amazing ideas for businesses,
Wow.
but they were doomed to fail.
Really?
Simply because they kind of ignored this one super important aspect of running a business, and that's the accounting side.
Wow, that's such a good point.
Yeah,
It really shows how, like, mastering the numbers is just as crucial as
it is.
pursuing your product or service or whatever you're offering.
Absolutely. No matter how great your idea is, if you don't have a handle on the financials,
Right.
it's like building a house on sand.
Yeah, so true. So let's get into it. What are some of the fundamentals that Pinson emphasizes right off the bat?
Well, she stresses accurate record keeping from the very beginning.
Okay, and why is that so important?
Think of record keeping as your business's central nervous system. It gives you the ability to analyze trends, spot problems early on,
Okay,
and make those really important decisions.
so it's more than just like staying organized for tax season.
Oh, definitely. Well, that's a big part of it. It really goes way deeper.
Mm-hmm.
Accurate records provide insights into your cash flow, your profitability,
Mm-hmm.
and your overall financial health. And that gives you the power to really steer your business in the right direction.
I like that. Now, what about the bookkeeping itself?
Okay.
Should we try to do it ourselves or hire a professional? What does Pinson say?
She recommends a balanced approach. She acknowledges that having a qualified accountant
Okay,
is essential, particularly for things like year-end taxes,
right.
but she stresses the importance of understanding the basics yourself,
Oh, interesting.
because that allows you to have meaningful conversations with your accountant,
Oh, I see.
and it empowers you to really use that financial data strategically.
So you're not just blindly handing things off to somebody else. You're actually involved.
Right, you need to be an active participant in your business's finances.
I like that. So where do we start with the actual mechanics of keeping the books?
Well, Pinson actually suggests keeping it simple.
Okay.
Especially in the beginning, spreadsheets
Really?
can be incredibly effective.
Instead of jumping into some fancy software.
Right, it's kind of like learning to drive. You wouldn't start with a Formula One car.
That's a great analogy.
Right, you'd start with the basics, and then you can gradually level up to more sophisticated tools as your business grows.
Perfect. So we'll master the fundamentals and then explore software options when we need that extra horsepower.
Exactly.
Now, I know Pinson covers two main accounting methods,
Right.
cash and accrual. Can you walk us through the difference?
Absolutely. So cash accounting records transactions when money actually changes hands.
Hmm.
So you log income when you get paid,
Okay.
and you log expenses when you pay a bill. Pretty straightforward.
Yeah, that makes sense. What about accrual?
Accrual is a little bit more complex. It focuses on when income is earned
Okay.
and when expenses are incurred regardless of when the cash actually flows.
Okay. So give me an example.
Sure. Let's say you finish a big project for a client in January,
Okay.
but you don't receive payment until February.
Uh-huh.
With cash accounting, you would record that income in February when you actually get the money.
Okay.
With accrual accounting, you record it in January when you earned it, even if the cash hasn't hit your bank account yet.
I see. So it gives you a clearer picture of your financial performance in that time period.
Exactly. It aligns the income and expenses with when they actually happened.
Makes sense. Which method does Pinson typically recommend for small businesses?
While cash accounting might work for very small businesses,
Okay.
with simple transactions,
Mm-hmm.
she generally favors accrual for most businesses, especially those that deal with inventory or extend credit to customers.
That makes sense because accrual provides a more comprehensive view
It does.
of the financial side of
It
things.
really does.
Okay. Now, Pinson mentions double entry accounting and chart of accounts,
Yeah,
which I think are more relevant to software users.
right.
But for those starting with a more simplified manual system,
Mm-hmm.
what does she suggest?
She dives into single entry bookkeeping.
Okay. And what's at the core of this single entry approach?
The income and expense journal, it's like a chronological record where you categorize every dollar coming in and going out.
Okay.
It's basically your financial diary, capturing the ebb and flow of your business's money.
I like that. And then there's also the petty cash record,
Yes.
which I have to admit I've never really given much thought to.
It's easy to overlook those small cash purchases, but they can add up.
That's true.
So the petty cash record helps you track those miscellaneous expenses.
Okay. So we've covered record keeping.
Mm-hmm.
We've talked about the two main accounting methods.
Right.
And we've touched on single-entry bookkeeping. What's next on our deep dive itinerary?
Let's tackle inventory, which
Okay.
is super important for any business that handles physical
All
products.
right, let's wrangle some widgets.
Pinson discusses the different types of inventory, from raw materials to finished goods and all the methods for valuing them.
Okay.
Understanding this whole inventory costing thing is super crucial for accurately assessing your profitability and managing your taxes.
That sounds like it can get pretty complex.
It can, but we'll focus on the key takeaways that matter most for a small business owner like yourself.
Okay, sounds good. So besides inventory, what other specific records should we be thinking about?
Well, fixed assets are another big one.
Okay.
These are the long-term investments in your business.
Mm-hmm.
Things like equipment vehicles or buildings that are going to benefit your business for more than just a year.
Right. The big ticket items that kind of form the backbone of operations.
Exactly. And one key concept that goes hand in hand with fixed assets is depreciation.
Depreciation. Now, isn't that what happens to my car every time I try to parallel park?
Well, in accounting, depreciation means spreading out the cost of an asset over its useful life.
Okay.
So you don't expense the entire cost in the year you buy it.
Right.
Instead, you gradually allocate it over the years that it's expected to help your business.
Oh, so it's more like reflecting the asset's declining value over time.
Exactly. And Pinson also mentioned something called Section 179 deduction, which can be a nice little tax benefit, but it's best to talk to your accountant about whether it applies to your situation.
Noted. Now, how do we actually keep track of all these fixed assets?
Pinson recommends keeping a detailed fixed asset log. Think of it like an inventory for your big ticket items.
Okay, so just like we track inventory, we track these big purchases.
Exactly. It should include things like the date you bought it,
Mm-hmm.
description of the asset,
Mm-hmm.
the cost, and how you're depreciating it.
Got it. So we've covered inventory and fixed assets.
Right.
What about tracking the money that's constantly coming in and going out of the business?
That's where accounts receivable and accounts payable come in.
Okay.
Accounts receivable is all the money that people owe you for goods or services you've already provided.
Okay.
It's like your IOU tracker, making sure you get paid for all your hard work.
So it's about managing those outstanding invoices and making sure the cash keeps flowing in.
Absolutely. And on the flip side, we have accounts payable,
Okay.
which tracks all the money you owe to your suppliers and vendors,
Okay.
basically your outstanding bills.
Okay.
Keeping this in check helps you stay on top of your financial obligations.
So managing both sides of that coin is key for healthy cash flow and good relationships with your suppliers.
Absolutely. Now, let's not forget about payroll, which can be a bit of a headache for small business owners.
Oh, tell me about it, especially when you start hiring employees.
Right. It's a big responsibility with lots of moving parts.
Yeah.
You have to calculate withholdings accurately,
Yeah, huh?
make payments on time, and file reports with the government.
It seems like there's a lot of room for error.
There is, and any missteps can lead to some hefty penalties.
Yikes. So this might be an area where it's wise to get professional help.
Absolutely. Now, Pinson also dives into this whole tricky area of classifying workers
Mm-hmm.
as independent contractors versus employees.
Ah, yes. That's a gray area that a lot of entrepreneurs struggle with.
It is, and it's super important to understand the legal differences and the implications for taxes and liability.
So how do we figure out who's who?
Well, Pinson highlights something called the 20 common law factors,
Okay.
which the IRS uses to determine worker classification.
And what are some of those factors?
They look at things like how much control you have over the worker's activities,
Mm-hmm.
their financial independence, and the nature of a relationship.
Oh, wow. That sounds pretty complex.
It is. It's definitely an area where it's smart to get some expert advice.
So Pinson recommends talking to the IRS or a professional to make sure we're doing it right.
Yes. Getting this right from the start can save you a lot of headaches down the road.
Makes sense. So we've explored a bunch of different records.
We have.
From inventory and fixed assets to accounts receivable and payable.
Right.
And then we even touched on payroll and this whole independent contractor situation.
It's a lot to keep track of.
It is. What's next on our journey through keeping the books?
Now we're going to move on to the crown jewels of accounting. Financial statements.
Okay, I'm ready to unlock the secrets of these essential reports.
Let's do it. Financial statements, they're like a window into your business's soul,
Ooh, I like that.
revealing its financial health and performance.
Okay.
And Pinson starts with the balance sheet,
Okay.
which captures a snapshot of your financial position at a specific point in time.
So it's like hitting the pause button
Yes,
on your business journey
exactly.
and examining its financial status
Precisely.
at that exact moment.
Right. And the balance sheet structure is based on this fundamental accounting equation: assets equal liabilities plus equity.
Okay, can we break down each part of that equation?
Absolutely. Assets represent everything your business owns that has value, from tangible things like cash inventory, equipment buildings, to intangible assets like patents or trademarks.
So assets are basically all the resources that contribute to your business's worth.
They are, and they're further categorized as current or fixed.
Okay.
Current assets are those that you expect to convert into cash or use up within a year.
Okay, so like cash accounts, receivable inventory.
Exactly. And fixed assets are those long-term investments that are meant to benefit your business for more than a year.
Like our equipment, vehicles, buildings.
Exactly.
Okay, now what about liabilities?
Liabilities represent all the outstanding obligations your business owes to others.
Okay, so it's the debt side
It is.
of the financial picture.
Precisely. And just like assets, liabilities are also categorized as current or long-term.
Okay,
Current liabilities are due within a year.
so things like accounts payable, short-term loans.
Right. Accrued expenses.
Okay.
And long-term liabilities extend beyond a year.
Mortgages, long-term loans, deferred taxes.
Exactly.
Okay,
And finally, we have equity,
okay.
which represents the owner's stake in the business. It's what's left after you subtract liabilities from assets.
So it's basically the business's net worth.
It is. The balance sheet equation really encapsulates that fundamental relationship between what the business owns, what it owes, and the owner's stake.
Wow, that's a powerful way to gauge your financial strength.
It is. Now, Pinson then moves on to the profit and loss statement,
Okay.
also known as the income statement, which she describes as a moving picture
Okay.
of your business's financial performance over a specific period of time.
So it's capturing the story of your profitability.
Exactly. And the formula is pretty straightforward.
Okay,
Revenue minus expenses equals net income.
okay. So revenue being the income you generate from sales or services.
Right.
And expenses are all the costs you incur to generate that revenue.
Precisely. Expenses include things like the cost of goods sold, salaries, rent, utilities, marketing, interest payments.
By analyzing the profit and loss statement, can you really pinpoint areas for improvement?
You can. It helps you assess profitability, identify trends, and see where you might be able to cut costs or increase revenue.
That's really valuable insight.
It is. And Pinson points out that there are two main formats
Okay,
for presenting the profit and loss statement,
okay.
single step and multi-step.
What's the difference?
The single-step format is very straightforward.
Okay,
All revenues are listed together. All expenses are listed together.
okay,
It gives you a quick snapshot of profitability.
okay.
The multi-step format provides a more detailed breakdown separating costs into different categories.
So things like cost of goods sold, operating expenses, non-operating expenses.
Exactly. It allows for a deeper analysis and helps you pinpoint specific areas for improvement.
Okay, that makes sense. Now, Pinson calls the cash flow statement the lifeblood of a business.
She does.
Why does she emphasize it so much?
Well, the cash flow statement is vital because it tracks the movement of cash both in and out of the business. It shows you where your cash is coming from, where it's going, and how much you have on hand.
So it's all about understanding the dynamics of the money coming in and out.
It is. It's crucial for managing your liquidity, making sure you have enough cash to cover your expenses, and making investments for growth.
That's important.
It is. Pinson highlights three main sections within the cash flow statement:
Okay.
operating activities, investing activities, and financing activities.
Can you explain those a little bit?
Sure. Operating activities include cash flows related to your core business operations.
Okay.
So cash received from customers, cash paid to suppliers, cash for salaries and rent.
Okay. Investing activities are those related to buying or selling long-term assets?
Exactly, like if you purchase or sell equipment or property.
Okay. And financing activities cover cash flows related to borrowing or repaying debt or issuing or buying back stock.
That's right. The cash flow statement paints a comprehensive picture of your cash flow patterns, which can really help you identify potential cash shortages and make better decisions about managing your working capital.
It's like having a financial crystal ball.
It is. And Pinson also emphasizes the importance of creating a pro forma cash flow statement.
What's that?
It's basically a projection of your anticipated cash flow over a future period.
So it's like a financial forecast.
Exactly. It helps you plan for future expenses and investments.
So it's like a financial roadmap guiding future decisions.
Precisely. And Pinson recommends revisiting and revising this pro forma statement periodically as your business grows and changes.
Got it. Now, Pinson doesn't just stop at explaining these statements.
Right.
She introduces this whole concept of financial statement analysis.
She does.
And I've heard that analyzing these statements can unlock so much insight.
It can. It's about going beyond just looking at the raw numbers and extracting meaning from them.
Okay.
And Pinson introduces these things called financial ratios,
Okay.
which are super powerful tools for assessing your business performance.
I know ratios can provide benchmarks for comparison. How do they help us evaluate financial health?
They allow you to compare your financial data to industry standards or to your own past performance,
Okay.
which gives you a much more objective and insightful perspective.
Okay.
And Pinson covers a wide range of ratios, including liquidity ratios, profitability ratios, and debt measures.
Let's start with liquidity ratios. What do they tell us?
Liquidity ratios measure your business's ability to meet its short-term obligations.
Okay.
One common example is the current ratio, which is calculated by dividing current assets by current liabilities.
Okay.
A higher current ratio indicates a stronger ability to cover those short-term debts.
What about the quick ratio?
The quick ratio is similar to the current ratio,
Hmm.
but it excludes inventory from the calculation,
Okay.
which gives you a more conservative measure of liquidity since inventory might not be easily converted to cash.
That makes sense. Okay, now what about profitability ratios?
Profitability ratios assess your ability to generate profits from your operations.
Okay.
The gross profit margin
Okay.
is calculated by dividing gross profit by sales. It shows you what percentage of each sales dollar is left over after covering the cost of goods sold.
Okay.
And then you have the net profit margin,
Hmm.
which is calculated by dividing net income by sales.
Okay.
And that shows you the percentage of each sales dollar that translates into profit.
Half of all expenses.
Exactly. These profitability ratios can help you evaluate pricing strategies,
Mm-hmm.
cost control measures, and overall operational efficiency.
Makes sense. Now, what about debt measures?
Debt measures show the extent to which your business relies on borrowing to finance its operations.
Okay.
One important measure is the debt-to-equity ratio,
Okay.
which is calculated by dividing total liabilities by total equity.
Okay.
It shows you the proportion of financing that comes from debt compared to equity.
Okay.
And a high debt-to-equity ratio could indicate higher financial risk,
Okay.
meaning you're relying heavily on borrowed money.
Okay. And then there's the times interest earned ratio.
Right. The times interest earned ratio measures your ability to cover your interest payments.
Okay.
It's calculated by dividing earnings before interest and taxes by interest expense.
Okay.
A higher times interest earned ratio suggests a stronger ability to service your debt.
Okay. So all of these financial ratios combined give us a really good toolkit to understand a business's financial health and performance.
They do. They can help you identify areas of strength and weakness
Mm-hmm.
and opportunities for improvement.
I like it.
Now, Pinson doesn't just leave you hanging with these concepts.
Okay.
She actually walks you through some practical examples.
Ooh, give me an example.
She uses a case study of Mary's flower shop to illustrate how to interpret those financial statements and identify trends.
It's always helpful to see things applied to the real world.
It is. And the case study highlights the importance of looking at both historical and comparative financial statements.
Okay. What does that mean?
Historical analysis means looking at your financial performance over time
Okay.
to see trends and patterns that can inform your future decisions.
Makes sense.
And comparative analysis means comparing your financial data to industry benchmarks or similar businesses.
So you can see where you stand.
Exactly. And it helps you assess your competitive positioning and identify areas where you might need to improve.
I like it.
Now, financial statement analysis isn't just a one-time thing.
Okay.
It should be an ongoing process
Okay.
that involves both qualitative and qualitative assessments.
But it's not just crunching the numbers.
Right. It's about understanding the story behind those numbers.
Got it.
And using that knowledge to make strategic decisions.
Love it. Any tips for conducting effective financial statement analysis?
Pinson recommends focusing on the key performance indicators
Okay.
that are most relevant to your specific business goals.
Okay.
And she says to dig deeper to understand the underlying causes of any trends or variances you see.
So it's not enough to just observe changes in those financial ratios.
Right. You need to understand what's driving those changes.
Okay. And she advocates for using this proactively
Absolutely.
for planning and decision making,
Right.
not just looking back at past performance.
Now, before we move on from financial statements,
Okay.
I want to touch briefly on the idea of pro forma financial statements.
Okay.
These statements are essentially projections of your future financial performance.
Okay.
And they're super important for planning
Okay.
and for getting funding from investors or lenders.
So they show your financial vision
They do.
and demonstrate how viable your business plan is.
Exactly. And Pinson covers the three primary pro forma statements:
Okay.
the balance sheet, the profit and loss statement, and the cash flow statement,
Okay.
each one giving you a forward-looking perspective on your business's financial health.
Now, creating these projections
Mm-hmm.
requires some serious forecasting
It does.
and analysis, right?
You need to analyze your historical performance, look at market trends, and consider your strategic initiatives.
Got it. And it's important to be realistic in those projections.
Absolutely. Investors and lenders will definitely scrutinize these statements.
Makes sense. All right. So we've explored the world of financial statements.
Well, we have.
Now let's shift our focus to taxes. I know Pinson dedicates a whole chapter to this.
She does.
And it tries to demystify the tax landscape for entrepreneurs.
Taxes are a fact of life for any business owner.
Right.
And Pinson emphasizes that understanding the tax system is crucial for making smart decisions.
So it's not just about compliance.
No.
It's about using that tax knowledge strategically.
Precisely. She outlines the various federal taxes that businesses might encounter,
Okay.
such as income tax, self-employment tax, payroll taxes, and corporate taxes,
Okay.
depending on how your business is structured.
Now what about estimated taxes?
Estimated taxes are payments that you make throughout the year
Okay.
to cover your anticipated tax liability.
Okay.
And they're especially important for self-employed individuals
Mm-hmm.
and business owners whose income isn't subject to regular withholding.
Okay. And Pinson also breaks down tax reporting specifics
She does.
for different business structures, like sole proprietorships, partnerships, S corporations, and C corporations.
Right? It's important to understand the tax implications of your chosen business structure.
Makes sense. Now, I'm sure the IRS has some resources to help with all this.
They do. They offer a lot of free publications and forms,
Okay.
which can be really helpful.
So Pinson really emphasizes the importance of understanding these tax forms
She does.
and how they can actually improve our business analysis.
Right.
Now, how does that work?
She uses Schedule C as an example.
Okay.
Which is the form that sole proprietors use to report their business income and expenses.
Okay.
By becoming familiar with that form, you get a better understanding of the specific categories of income and expenses that the IRS is looking at.
So we need to align our financial tracking
Yes.
with what the IRS expects.
Exactly. It's about working smarter, not harder.
Right.
And another important tax form is Schedule SC,
Okay.
which is used to calculate self-employment tax,
Okay.
which covers Social Security and Medicare taxes.
Right. So that's a big expense for a lot of entrepreneurs.
It is.
So understanding how it's calculated
Right.
can help us plan for it
Exactly.
and make sure we have enough money set aside.
Now, tax laws are always changing.
Oh, they are.
So Pinson also emphasizes the importance of staying up to date
Okay.
on any new developments,
We do that.
subscribing to IRS publications,
Oh.
attending tax workshops, or consulting with a tax professional can help.
Good advice. Now, before we wrap up this section on taxes, I want to talk about record keeping for tax purposes.
It's not enough to just file your tax return.
Right.
You need to be able to back up your income and expenses if you ever get audited.
Okay.
So Pinson provides a general record-keeping schedule
Okay.
that outlines which records you should keep and for how long.
That's a really helpful resource
Is.
to make sure we're in compliance with the IRS.
Exactly.
Any other tips on organizing those records?
Pinson stresses the importance of keeping your records organized
Okay.
so that you can easily retrieve them if needed.
Right. So we've covered so much ground,
We-
from financial statements to taxes.
Right.
But before we wrap up this deep dive, I think it's helpful to revisit the top 10 takeaways from keeping the books.
Absolutely. Think of it as a cheat sheet for our listeners.
Okay. I like it.
Number 1, accurate record keeping is absolutely essential for success.
Okay. Number 2.
Understanding the difference between cash and accrual accounting is vital.
Number 3.
Master the income and expense journal and the petty cash record.
4.
Become an expert in inventory management and cost identification methods.
5.
Embrace the power of depreciable assets and Section 179 deductions.
There's 6.
Manage your accounts receivable and payable diligently. Handle payroll accurately and understand those complexities of independent contractor classification.
8.
Make financial statement analysis a regular practice.
9.
Familiarize yourself with the relevant tax forms and take advantage of all those free resources the IRS offers.
And 10.
Treat the general record-keeping schedule and the independent contractors appendix as your guiding stars.
Those are some amazing insights.
They are.
I hope our listeners are finding this exploration as helpful as I
Me
am.
too. Remember, in the business world, financial literacy is your superpower.
I love that.
So grab a copy of Keeping the Books,
Okay.
dive deeper into these topics we've discussed, and start building your financial foundation for success.
Absolutely. Make those dreams a reality. So we've covered record keeping and accounting and even taxes.
We have...
What other insights does Pinson offer in keeping the book?
Well, there's a really powerful message that she emphasizes throughout the whole book,
Okay.
and that's the importance of understanding
Okay.
and utilizing financial knowledge.
Okay.
She actually calls it a superpower in today's business world.
Financial literacy is a superpower. I like that.
It is.
Why does she place so much importance on it?
She argues that having a great product or providing an excellent service is only part of the equation for success.
Right.
To really thrive as an entrepreneur, you need to be able to manage your finances well. make smart decisions, and navigate all those complexities of accounting and taxes.
So it's about taking control, being in the driver's seat
Exactly.
when it comes to your financial future.
It's about becoming the master of your financial destiny.
Right. Rather than letting it control you.
Precisely. When you're financially literate, you can respond to challenges proactively, seize opportunities, and make strategic decisions that will benefit your business in the long run.
So how do we cultivate this financial superpower? Where do we even begin?
Well, Pinson offers some great advice in keeping the books.
Okay.
She encourages entrepreneurs to embrace continuous learning.
Okay.
The business world is constantly changing.
It is.
So you have to be willing to stay curious and keep expanding your knowledge.
So it's about always striving to learn and refine our understanding of financial concepts.
Exactly. She also recommends seeking guidance from mentors, advisors, and other experienced professionals.
Okay.
Tapping into a network of financial experts can provide invaluable support and insights.
So we don't have to go it alone. We can reach out to people who have been there
Exactly.
and done that.
It's like having a financial Sherpa guiding you up the mountain.
I love that analogy. And what about leveraging financial tools and resources?
Absolutely. Things like accounting software, financial calculators, and online resources can really streamline your financial management
Okay.
and give you valuable data.
So we should be using technology to our advantage.
Absolutely. The path to financial literacy is a journey.
Okay.
It required a growth mindset and a commitment to continuously improve your understanding.
It's a never-ending process of learning and refining our financial skills.
It is, but the rewards are worth it.
Okay.
When you're financially savvy, you can make informed decisions, build a sustainable business, and achieve your entrepreneurial dreams.
It's the foundation for lasting success.
It is.
So if you're ready to unlock your financial superpower, keeping the books is an excellent place to start.
I agree. It's full of practical advice and insights that can transform the way you think about money.
It's not just about crunching numbers.
Right.
It's about understanding the story they tell
Exactly.
and using that knowledge to build a successful business.
Embrace the power of financial literacy and watch your business thrive.
Well, that brings us to the end of our deep dive into Linda Pinson's Keeping the Books.
It does.
I hope you found this exploration of record-keeping, accounting, and taxes both informative and empowering.
Me too. I encourage everyone to grab a copy of the book
Yes.
and continue on your journey toward financial mastery.
Absolutely. Until next time, may your bookkeeping be insightful and your ventures prosperous.